Hello everybody, I'm Giuseppe Basili, also known as the FibStalker. Thanks for joining and watching this video. I hope you had a long weekend and you enjoyed your Easter break. So in this video I'm going to do a full review of all the markets. Today is April the 3rd, 2018, and this video is part of the FibStalker Analysis and Trading Service. Today again it's April the 3rd, 2018. It's 11:30 a.m. EST. So as usual, I want you to ask to read and accept the disclaimer here, this usual disclaimer. If you're not done that yet, please stop the video, the recording now, and read and accept the disclaimer. All right, so let's dive into our markets. And we'll start from the SP 500. SP 500 is continuing lower here, as we had anticipated. In this range, 50% typically do not hold. Okay, so this market has tried to hold 50% in the past here. But then the opposing 50% did not work. So actually worked once, but then it did not hold here, and so now there are the usual two levels. The lower level comes from an extension from the highs in 2015-16 here. And that has not been tested yet. But before that level, there is the 25-30 here. Okay, so on the daily, what we are seeing this market trading not as technically as we would like it to trade. This market likes to trade in traditional measure moves, but we have seen these huge moves here, and so there's a 25, 47, 70 level price here that would help price then into the 25, 40, and potentially even 24, 82. So we're gonna see what's going to happen next in this market, but at the moment it's still a seller market. The dollar index is kind of completing that reversal there, and as we can see here, in this phase, this market has initially respected 50% and failed, and it's now continuing higher. And now on the weekly time frame, this market has not traded 50% here. This is an extension, so it's currently trading in extensions on the daily time frame. Now on the larger time frame, you remember that we there is an extension short here that traded into that first target. So the next measure move is going to be 92.59. That's where potentially we could see participation from the weekly short. It doesn't mean that the market is going to get there. What it means is that there is a potential for participation in that area. So before that area, there are other levels that we need to keep into account. Okay, lows, high to lows here. The 1997 is the next area that we want to watch for a potential entry of short. Gold has been it is on a sequence of measure move long still. The second one, the inner move here that we see from the lows at the beginning of the year to recent highs, has been tested 1, 2, 3 times, and appears now that it's going to be tested a fourth time, and that could be it. We could see this market then breaking 12.96 and trading again into 12.63. Okay, and the reason for that is that the dollar. I'm still looking at an inverse relationship between gold and the dollar. Okay, that's the way I always read gold. I don't look at intermarket relations, a complex intermarket relation that might change in time. I don't think it's necessary to take good trades, and even the simple consideration that we do are more than enough to understand what's going on. Okay, so the highs to lows here, as traded in the past. This is silver. This is the weekly time frame from high to lows. The 50% 1698, as you remember, as traded in the past. 1583 is the target, and we have a target below at 14, in the 14 area as well, and that's the 50% short from highs in April 2017 to lows here. Sorry, that's not the level, and the level is the high, the all-time high here, the relative high to the low in December 2016 here, and that has targets in the 1470 area. So nothing has changed really for what concerns the large level. Obviously, this market makes no sense here. You know, it's been moving laterally now for more than 2 months, so obviously it's very difficult to it's more difficult to trade. It's not very difficult, it's more difficult to trade. It depends on which time frame you work on, and there will always be measure moves or moves that can be traded. What I don't like in this market, it's the low volume, and therefore very often, I mean, I only trade it when there are opportunities on the larger time. So let's look at the majors. Australian dollar, US dollar, the 8039 came into play here 3 times since last year, and this market seems to be directed to testing the 7480, but it's not going to go there in a straight line here. Okay, so what we saw here, we saw a market that has had a 50% short highs to lows, and that has brought price into the first target, to the pip. The market never came to trade into the next measure move. It was not capable of doing that. So we need to assume here that this market is going to continue lower. So we were looking for inner measure moves or traditional measure moves here, and the traditional measure move from the recent high did not work, and what we can take is the either the low or the notable anchor here, or this high here, and we will use this information to derive. As you can see, the first target of that move, it's below price 76.20, and then the second target lines up with the second target of the larger move here. Okay, so these two targets, the second target of the inner and the second target of the outer, kind of line up together. Okay, so that's where eventually the market could be moving, and that moves price close to that 74.80 area. Okay, sorry, 74.80 area. All right. So next is the euro dollar, and the euro dollar is started seeing here some real weakness. The market has not respected the 50% short here, but we can use that as a guide for targets as well. You will remember that this market traded a level that we identify after the fact here into the first target, and we're going to use that same level to identify the area where this market could go to. Of course, if that happens, it's gonna take many weeks, and it's also possible that once the dump money below price here is is gone, this market could come and retrace at 50%. And here I'm just considering the previous size as a support here, price going into 120.85, so that's a potential scenario here. I'm not saying that things are going to play exactly like this. This is a scenario to keep in mind, and because we saw that in the past as well, and that's if that happens, you want to be ready and sell at 123.22 here. Of course, if it plays out exactly with these same levels, but if it doesn't, we're going to update these levels going forward. So that's the scenario for the euro dollar going forward. Pound versus US dollar, on the other hand, has been relatively stronger here, and this market is kind of trying to retrace here, and of course, if the dollar index continue its move, then eventually this market is going to give way, and if that happens at the 50%, 41.27, that would be that would be great. And a retest of the previous lows here seems possible in this market, and let's see, and the 50% has not come into play. What is supporting price is an extension here from another bull anchor from the lows that we saw at the beginning of March here, and that's what's supporting price. Okay, so again, the 50% short here could be an opportunity for an entry short into this trend, but this could continue faster before getting into 141.29, and so we have to look at 4-hour extensions, and we're going to do that during the week. US dollar Canadian dollar has showing weakness here, and has also broken that extension short. So formally, the weekly bull bears here are in control. Highs to highs respected, went to the first target. Actually, the next measure move failed even well before that. Okay, the next measure move was high to new highs. That has failed. That has failed before that. Okay, so the trend has failed when the market actually pierced 128.52 last week, and since you remember last week we have traced the extension short that is pushing this price lower into 127.64, and the second target is 126.73. Okay, so the level now we're looking for a potential initial reaction of long would be the 50%, 26.87. Extension might come into play, but we have, and they're coming up right now, 27.80, so we could get a bounce here. However, the actual test of the whether this trend is going to continue higher and the bulls are going to take control again will happen in this area here, 126.87. We will see whether the bulls are capable of reversing this price, so the Canadian dollar is going to strengthen all over the board here. Okay, US dollar Swiss franc, it has continues to trade at 50% that we saw trading last week. It was very technical market, so no excuses not to trade this market here. When the 50% are technical, these are very good bets, and here what we are looking at, it's a first target which is very close, 96.24, and then there is also a second target above that level. We'll see whether that plays or not, and of course there is the 50% opposing 50% here that lines up with that second target, and the second target of this move here, and that is also very close, 96. It's 96.12 here, so that would be a very good profit target for this long as well. Okay, so market moving into 96.24. The Japanese yen, as we indicated yesterday in the chart I shared on the in the room, I also shared the timing of that. I was a little bit uncertain just because the Japanese yen has been strong all over the board here, but the dollar index is now really seems to be really reversing here, And so this market had, as indicated in the chart yesterday, 107.57 as the first target, still behaving well, and that's where we could see this market move into, and then we will reevaluate after that. New Zealand dollar, US dollar is moving kind of laterally here between two areas of support and resistance here. And when we trace on the daily the recent high to lows here, we had that the other 50% that we should consider as a potential resistance here. That level has already acted as a resistance once, as we can see here, and now is likely going to be retested here, and we're going to see whether this market is going to resume its weakness, or it wants to visit the highs here, 74.55. So the story will be written here, likely going to be written in this week or next week, and we will see whether the two scenarios, number 2 continuation higher, number 1 continuation lower on dollar index strength. US dollar Singapore dollar has been diverging somehow from the dollar index. So as we can see here, it's much weaker than the dollar index itself. So when that happens, I just follow the measure moves in this market. Okay, so there's no need to force anything if this market is not really matching the dollar. I like to use this as a proxy for the dollar, but it's not always a proxy of the dollar. It's a market of itself. The 50% here has been tested once, twice, 3 times, still holding here. It gives us 2 targets. One is 131.55 and the other is previous 50% short here, and second target 31.87, just above that level. Okay, so this is it for this first part. Thanks for watching, and I'm gonna see you in the second part of this weekly review. Bye bye now.